right? That's rough for silver compared to other markets, and that shows you that right now the demand is safe haven. Right now the demand is recession hedge. Right, we're going to have our way very soon. I'll explain that in a second.
Today, we're delving into China's unyielding silver demand, as reported by Lanci. Despite economic challenges, silver consumption remains strong, and higher-grade silver is dwindling. We'll also explore the economic factors at play and how they might affect the gold and silver markets, along with the future protection of metal inventories by producing nations. Keep an eye on our channel, and let's listen to Lanci again.
Before we do, and we'll talk about the market as well. Before we do that, I want to give you an update on silver inventories. This is from Bai Xiaojun. SGE just released its weekly report. The physical settlement of silver reached 776.61 tons with a delivery ratio of 26.45, which is 9% higher than the annual average delivery ratio. 26% of their metal goes in and goes out. See, we're not talking about stock anymore. We're talking about flow. It goes in, it goes out, it goes in, it goes out. All these vaults, all these exchanges, they're toll booths now. That's because there's no more silver laying around to just use. You have to look for it. You have to work for it. And in fact, China is importing lower grade silver now than they did a year ago because they're running out of the easy stuff. The cream is gone. They're going for the harder stuff to get. Okay, silver inventory has once again flowed out of 43 spot 365 kilograms, hitting a new low since 2020. I'll show you a couple pictures there, right? This week's delivery, this week's volume, delivery ratio this week, 75.31. Think about that. 75% of the metal that went in went out on gold, okay? 26% of the metal that went in went out on silver. Now, this changes. Next week, it'll be 0 for gold, and it could be 50 for silver. But the point is, you don't see these kind of numbers coming out of the COMEX. And when you do, it always goes into China. Anyway, so cumulative delivery ratio, 17% for silver, right? And 71%. So that's pretty high. The gold, look at the gold vault. That's the gold's being taken delivery of. That's all the gold, right? And it's higher for silver as well. Anyway, next picture. SGE Vault's weekly report. So the change is down 43,365. So thank you, Bai. And let's move on to the next thing. So what I've done is I've taken the stories that I put up, which are all very brief hits, but they're very important, I think, when you're trying to look at the tapestry that is silver. And let's go through them. Let's start with Michael Hartnett. So in this one here, Michael Hartnett is one of the most respected, we're not going to watch the video, one of the most respected macro analysts on the street. And he believes in 2024, in the first quarter, the Fed will almost definitely ease. He's actually calling it a policy panic. And when that happens, I'm quoting him now, when that happens, you want to own bonds, you want to own breadth, meaning broader stock market, and you want to own bullion. And he's going to say bullion. He's not going to say gold because he means gold and silver. And he's the best analyst macro-wise on the street right now. And he's been that way for like the last 10 years. Other people will do what he says. That's that one. Deutsche Bank put out their performance review. All right, so here's the total return performance of major global financial assets in October in local currency. Local currency for us is dollars, right? So gold, well in first. Silver, which, let's face it, really has lagged behind gold this month, right? And it's number 2 in the world. Think about that. That's not a bad number 2. So gold gets the gold, silver gets the silver. All the way down here, you've got oil getting killed. You've got stocks in the middle somewhere. And there you have it. Here's the same thing in US dollars. That moves silver to third. But what you're looking at is when you look in US dollars versus local currency, you're looking at the inflationary effect. That's why Russia's a little bit higher. They've got their own problems. And here's gold year to date in local currency. And there's silver down there. See that? See, that's a rough year, right? Right? That's rough for silver compared to other markets. And that shows you that right now the demand is safe haven. Right now the demand is recession hedge, right? We're going to have our way very soon. I'll explain that in a second. So that was Deutsche Bank's report. Founders, UBS says as bonds rally, the dollar will drop. Okay, we're all probably familiar by now with what happens the last 2 months. The bond market got slammed, and what you saw the gold market, silver market, the dollar went up. Then the war started, and people bought gold. They bought a little silver, but they mostly bought gold, right? And the bond market turned around. This is what's going to happen according to UBS. If the bond buying continues, then the people who buy bonds will sell dollars. So it's like, I have dollars, I buy a bond. It's like you're getting out of dollars. You're getting the security, getting the asset. And if the dollar goes down, that's going to add more fuel to the fire with gold and silver. Even more in silver than gold this time, and I'll explain why in a second. Actually, let me explain that now before we move on to the mining stocks. The whole constellation of markets, the whole spectrum, is behaving like we're going to be in a recession. Now, I'm telling you what's going on, and this is what's going on as long as there's no new item, no new war, no new peace, no new exogenous driver. The economies of the world are close to recession. The U.S. market is taking that as a cue that not only will the Fed stop hiking, which they pretty much have done, but they'll start easing very soon, as Hartnett said. When that happens next year, stocks will rally, of course. Bonds will rally, not of course, but okay. And precious metals will rally. Why? Because everybody's short silver as an economic hedge against war gold. Silver's going to scream when they lower rates next year. And so all of a sudden, they get worried that it's an economic metal. Silver's going to go up because of the economy. Silver should just go up, and that's what's going to happen. All right, so gold's down $9, silver's down 14 cents. You know, like second or third highest all-time close for gold. And you know, silver is suffering. I'm telling you, silver is suffering because of the economic fears, just like last year. I'm going to show you something. These cycles repeat, all right? They repeat. Watch. When did the Fed start easing? Start tightening. They started tightening in April of 22, all right? And this is silver. The economy is going to do bad. The economy is going, and there's like little short squeezes we had as we went into buy season. And then it was like, oh, wait a minute. The economy's doing fine. The economy's doing fine. And this, I don't know what this is, but this is, you know, it is what it is. I think this is the stock market took a dive and silver took a dive with it. See how that works, right? And then it came back. And now we're looking at this. See this here? From, let's say, from here, from August to here, that is this. Same thing, although it's not as bad, but I want you to look at that. This is the recessionary fears keeping silver down. But look at how much they kept silver down last year, right? We're making a higher high at the most bearish time, higher low, I should say, at the most bearish time of year. And we're entering into the most bullish time of year. I don't want to be a cheerleader. I just want to say to you, you don't want to be long gold. You want to be long silver in the next leg higher. That's it.
As we wrap up today's exploration of China's insatiable appetite for silver and its intriguing economic implications, we leave you with this enigma. In a world of shifting fortunes and hidden treasures, remember that silver, like secrets, can hold its value in the darkest of times. Keep your ear to the ground and your eye on the prize, for the future is an intricate tapestry of intrigue and opportunity. Until next time, may your pursuits be as complex as they are rewarding. Please like, share, and subscribe to our channel for more informative and authentic predictions about gold, silver, and global economy. Thank you.